Hey everyone, welcome to episode 3 of the MIU, also known as the Mortgage Intelligently University. So today we're coming with you with some big news that was announced this week by the Federal House Finance Agency, also known as FHFA. FHFA has raised their loan limits for conforming in high balance loans, and high balance loans are loans in high cost areas. So they've raised them from 548 to 50 to 625, from $548,250 to $625,000. And in the high cost areas, they raised them from $822,375 to $937,500. Those are huge increases. And today we have Amir here who is going to talk about the huge buyer pool that this really opens up in the marketplace in all areas, whether it's in the conventional markets and also in the high cost areas. So without further ado, Amir.
Hey guys, happy Friday. Ray, thanks for introducing me on today's video. Yeah, guys, this is enormous news. So FHFA, as Ray mentioned, raised this limit. It's for 2022, but we're happy to announce that at MCF Mortgage, we're going to be honoring those new loan limits right now before they go into existence. So if other lenders are not doing it, we're going to participate in it now so that your buyer pool can get into a house now rather than having to wait 4 months from now when prices may even go up higher because of this new change. So FHFA always responds to increasing values of homes by increasing the conventional loan limits, okay? This is huge, as Ray said. Let's give you an example. For example, let's say that we had a borrower that last month wanted to buy a house that was $600,000, okay? They only had 3% down, which you could buy a home with 3% down still. You could even buy a home with 1% down. But if they were buying a house in a county where the loan limit was 548, having only 3% of 600,000 would mean that they would have a loan amount of roughly 578, okay? I'm sorry, 582. So with that being said, they would not qualify for a conventional loan. They would have to qualify for a jumbo loan, and you can't get a jumbo loan with 3%. So that borrower would not be a homeowner. Now, with these limits going up from 548, we're at 625,000. That borrower can easily buy a house with 3% down and become a homeowner. So if you had a borrower who was denied or who could not come up with enough of a down payment to qualify for a house because of the loan limits, this is a golden opportunity to help that family become a homeowner.
Absolutely. Thanks for sharing that, Amir. I mean, it just opens up the buyer pool, especially in areas where prices have increased pretty much throughout the entire nation, right? So Absolutely. as prices have increased, I mean, FHFA did a great thing in seeing that prices have increased throughout the country. So they've raised these loan amounts to keep up with the demand, right? And opening up new pools. So Amir, so tell me in the high cost areas, right? Yeah, because we mentioned there's 2 different loan limits here. So in the high cost areas, this will now open up the buyer pool in that area where borrowers may not qualify for a jumbo loan in a high cost area, right? Where now they can qualify in a high cost area because of the debt to income ratio factors, right? They're so different between the two.
Absolutely. So the same theory holds true, Ray, for the high cost areas. These changes, these global changes to the loan limits have impact not just on people buying in the 548,000 range, but in the high cost areas. Like our headquarters in Bethesda, Maryland is in a high cost county, Montgomery County, Maryland. I'm in Los Angeles, high cost county, okay? In these areas, the loan limit in the past was 822. So let me give you an example for this scenario. In the past, let's say you saw a house that was 865, you could put 5% down and get into a house roughly with a loan amount of 822. But if you were looking at a house that was 900, that was 920, and I know that seems like a lot of money for a lot of people, and it is, but that seems to be the norm in the high cost areas. Now you could look at $1 million house, put 5% down and bring yourself close to the loan limit of 937, or look at a $980,000 house and bring yourself to the loan limit of 937. So with 5%, you're getting into this home. This is huge because in these counties, borrowers were locked out because either they would have to go to a jumbo, and the same theory, stands true. You need way more than 3 or 5% to get a jumbo loan, or they wouldn't qualify because of the strict debt to income ratio underwriting that happens in jumbo loans. So again, this is amazing news across the board for conforming balance loans and high balance loans.
That's awesome news, Amir. Thanks for sharing that. So everybody, I want you guys to understand this out there. You're in high cost areas, your clients, just repeating what Amir said really quick, they can purchase a $980,000 home with only 5% down and not get hit with all the jumbo underwriting guidelines, which also means they also don't get the jumbo rates, which are traditionally higher than conforming in high balance interest rates. So it's huge, huge, huge information here, guys, to share with you on this Friday. So that's about it for now. We wanted to keep these short, like we were promising you guys. Amir, thanks so much for your input. Definitely appreciate it. Happy Friday, everyone.